morning, traders. Welcome to the TMT Stock Market Strategy video for Wednesday, August 31st. Yesterday we had a little bit of a push higher early in the morning, and then we kind of gently rolled over in a very light trading yesterday. But we did nonetheless close lower, well off its lows. Again, buyers of dips are still upon us, still pushing this market, trying to keep this market up and elevated. We are definitely seeing signs of cracks, of some selling that should be coming around the corner at any time now. However, we don't just assume that it's going to happen, right? Obviously, we want to wait and see what price does. So we've been watching the markets closely, and quite frankly, I don't believe we're going to see any big moves in the markets this week and even next week, as I mentioned in yesterday's video. So I want to get right to it. I'm not going to show you any indicators, guys, again, because there's really not much going on. Nothing has changed. We're still in a neutral state. We had an inside day from the previous day. So we're still trying to break out to the upside and or break down to the downside, but the bears don't have enough steam to push it down, and the bulls can't break above its normal resistance, which I'll show you. But what's interesting enough is that gold is starting to break down now. So remember, and I do like gold as a buy, and I want to show you the gold trade again, but I want to take a look at the dollar, right? So when you're trading precious metals, you still want to look at the dollar. And I'm a dollar bull. I will say this. You know what? The almighty dollar is a safe haven play. And regardless, it's just very difficult to really get this dollar to go down. And as of right now, you can see here we have 3 big days, outside days, and it's the 200 MA on the daily chart. So this is going to provide some resistance. But if we end up gapping up tomorrow over this, and the dollar index really is continually pushing higher, and we start to gap up, that's going to put a bid, and that's going to get that swing high that we were talking about here in early August, the beginning of August, actually, when I mentioned that this swing high needs to get taken out. This is going to be key, is this swing high here, okay, that 25.20, 25.30. If we take that out, then I do believe that we're really kind of off to the races, and that's going to put added pressure in the commodity sector, gold, precious metals, crude oil, natural gas, to say the least, and eventually would and will put pressure on equities, because obviously we do not want a strong dollar in our economy. So it's something that we need to watch closely, okay? Look at the weekly chart. I want to show you the weekly. Big, huge, bullish falling wedge. Excuse me, bull flag. I apologize. Big bull flag pattern here. All right, now if this starts to break out, okay, you're looking at $28, $29 out of the UUP. And again, I'll put targets when this does break out eventually. At the moment, your target will be that swing high at 25.20 right up in here, and then of course your ultimate target here would be the upper end of this trend line of the bull flag. Okay, but you can see a beautiful bull flag pattern. This is a bullish pattern, and this is on a weekly, so it gives much more clout than a daily chart. So GDX, you see, really took it on the chin yet today. This M top formation, I'm sorry, actually it's a double top. This double top formation, it is a little higher than this one, but you know what? I'm going to call it a double top, measured down to the 38% retracement right here at 23.72, and that's going to be your first target. And by the time that does get down to that 200, we'll probably catch up to it, and then we would reevaluate it. I would love to see this area here. We do have a thin zone on these volume profiles, so we could easily flush back down to this area here. Don't be surprised if it doesn't, because it will and can. Precious metals, especially gold, you get a lot of weak hands going, and they really start to sell off here. A lot of stops get elected, and then that's it. You get a couple of big day flushes, and then that's when we're going to start look to put some buy areas in the GDX. Here's the GLD, and again, guys, that double top formation measures way back down to the 120-ish area, and that coincides nicely with that 200. You remember the 200 will continue to rise as price is coming down. And it will stop eventually at one point. But 61.8% retracement, 121, that'll be one of the targets. And then the bigger target is going to be that measured move on the double top formation. Okay, that's GLD. Next is going to be the transport. Just want to show you that we are below that major area of resistance still, and we are still below this downtrend line. Okay, just want to show you where we are here, that the leader is not leading. Now let's get into the index. Spiders, you can see here, guys. Let me just open that up a little bit more for you. And let me get the Fibonacci retracements right up in here. Just want to show you where we are. And we are still looking at that 38% retracement coming in right around, let's call it right around the 211-ish area. 210 is going to be a big area, guys. 210 is going to be a very, very big area. So we're looking to see somewhere around there at that 210 area. But you can see what we did. We did nothing here. Right? Here's Friday. Here's Monday. And we took back a good portion of it, and then we rallied at the end of the day. So markets are not ready to go down. Don't fight the trend. Just be patient and look for your spots to trade off of. Here's the Russell. Actually looks like a beautiful bearish rising wedge, and that's where I got that rising wedge pattern. You could see that here. All right, grab that little guy right there, and got a nice little rising wedge. 1, 2, 3, 4, 5. We should be on our fifth wave up in here. So the real bigger target's going to be about 119. Okay, right here in the IWM. And lastly, the Qs, 23%, 38% retracement. Here's your two downside targets. That coincides nicely with the 50-day moving average. 112 will be that 38% Fibonacci retracement. That's going to be the next big target on the daily chart. All right, guys, I hope it helps. Yeah, the summer has been very, very quiet of late. So we're going to be looking for gold for an additional push lower, and we're going to see if we can get the markets to muster up a little bit of selling. You know, even a 3 to 4, 5% pullback is very, very healthy for the markets to move higher. So we shall see what happens. Have a great day. We'll see you tomorrow.